Welcome back to the Daily Journal. We are reviewing the 6am continuation from yesterday on NASDAQ. So, as I mentioned in my previous video where I traded the 2am candle, go check that out if you haven't seen it already. So, massive gap for the new week. Price expanded, and we're looking for a new phase of price to get onside this expansion. And so, we got that with a shadow retracement into the fair value gap. And for anybody who was looking for price to trade lower, if you aren't feeling secure in your model to trade from this point, you got to understand you don't want to see price drop into, deep into this range. Seeing price expand and then have a shadow retracement is exactly what you want to see for further continuation, right? For further expansion. You wouldn't want to see price drop lower. It would take more time to do that. You would just want to see expansion, maybe with the shadow retracements and then continuation. So that's what we're trading here is the 6am continuation, and the reason being is because the 2am confirmed the reversal, right? You'd swept these lows. Let's zoom in a bit. Right, you had swept the low and the candle body closed obviously above this candle wicks range. So dropping into the 50 minutes, and of course we've got these relative highs that we are targeting around. So price moves for one of two reasons: to rebalance inefficiencies and target liquidity. So the fact that we've rebalanced this inefficiency as well as targeted sell side liquidity, I expect price to then deliver to the buy side liquidity. So dropping down to the 15 minutes, the 50 minutes should confirm what we already have seen on the 4-hour, which is a reversal. And there it is. So candle body close, the last candle from the sequence of candles that manipulated lower to sweep the previous lows. Expansion was then met with expansion, and that candle close was the confirmation that we look for the following candle to expand higher. So we don't just jump in, we're now trading the continuation. Right? This 6am candle, the next one that's about to open, is going to be a continuation candle. So you don't want to see it drop lower. You want to see shadow retracements again, but we need to get on side. So we're looking for a lower time frame confirmation model. We've got the reversal here. We're looking for continuation models, and that comes in the form of protected highs and lows. In this instance, obviously protected lows. So the fact that we've now opened the 6am candle over here, we've now formed the wick, and we confirm that with the candle body close above this. However, I need to see SMT. And this is what you want to see. You want to see on the correlated pair, you want to see weakness. And you can see that it traded into this fair value gap. So just to point this out, you can see that ES had clearly dropped into this fair value gap. And of course, there is no fair value gap on NASDAQ, but there is a swing low, right? This is the correlated low, which NASDAQ has now technically swept since its correlated pair has done that, and it came from a fair value gap. That's exactly what you want to see. Because for me, this low is not protected since it delivered from technically speaking, a fair value gap with its correlated pair. So I got to the charts a little after this had happened. In fact, I got basically over here. And so because of that, I entered with my stop loss beneath this low, not this. This is a protected low, but I popped it over there. The reason being is because price has already traded back into this little order block, rebalanced this entire order block, and then closed above. You can see that really carefully if you zoom in there. Right, so you can see how the candle body closed above that. Right, so you can check that out. That tells me that this low is protected. If anything, if price were to trade back into this, I would expect it to do an immediate rebalance of the 0.5 of this wick. If price were to trade at this point here, it's going to come down to these lows. So you might as well put it there. Like if you were to get in here, this is where it would be. But it didn't need to be at that point, right? So I got there, just targeted these highs over here because you had these swing highs. So I wasn't getting greedy and actually got rewarded for it because price there was slippage on that move, and I actually ended up getting it filled higher. So it actually worked out to 2R in the end. And so there is the trade there, and that's the trade from the morning. Go check that out. There was a 15-minute continuation from the 2 a.m. open. But you can see it, right? There was that SMT. There was the change in the state of delivery. And that candle already come down, dropped into that order block. And I got in just before that candle closed. So yeah, really nice trade there. And just again, what I'm always looking for is just higher time frame models. The continuation model is just my absolute favorite because you get expansion and then you get the accumulation side of the market maker model. There's your manipulation, right? Once you get the manipulation, you just look to the left to confirm the accumulation has taken place. And there's two things that you look for. One, liquidity, right? So there's your Redisfica highs, there, and there. This is all low resistance liquidity, which is why this is a one-sided move, basically. So, and then you get your inefficiencies there, and it's a little over there, and so on. You don't need many. One is even enough. So you got liquidity, you got inefficiency, you've got orders paired at discounts here. So side has been taken. You get the change in the state delivery over here, and now you can expect distribution, which is just expansion. So yeah. Anyway, check my next video where we do the 2 a.m. reversal on Bitcoin. Basically the exact same model. We're looking for continuation using the 12-hour charts with a 15 and 30-minute entry for that 15 minutes market maker model. New time frame I'm playing with on Bitcoin. Anyway, see you guys in the next one. Cheers.